cycle tops? Is there a last cycle? Does it eventually just become a stable asset, because it's a standard? Where's this thing going in your mind?
I'm more and more siding on the last cycle. You can even see it on the chart. It's a drunken walk right now of demand and supply. We've had parabolic rises and a blow-off top in 4-year cycles for 3 times now. And this time we're doing these kind of weird drunken walks of demand and supply as different participants come in and different effects happen. And so I'm kind of like with Michael Saylor, which he said to Laura Shin, there is no top, Laura. I think we might just not have these 4-year cycles because they're predicated on a supply shock from the halvening. Every 4 years, the sell pressure from miners halves, and the sell pressure from miners is getting pretty small now. We're at what, 1.7% inflation rate per year from miners, and the next halvening goes from 1.7 to like 0.8% or something like that. That's infinitesimal in a supply shock when exchanges are already almost double that. Like the sell pressure from exchanges, if they were to sell all of their fees revenue onto them into fiat, not saying they do, but they do sell some of it. The potential for their sell pressure is 2 times what miners do. The sell pressure from Grayscale's ETF, well, it's not an ETF, but their fee management fees of 2% is about 5% of all the miners combined right now. So as ETFs start to climb, their sell pressure comes in. So there's all these kind of mature market like demand supply impacts that are really starting to reduce what impacts miners have, which is what the 4-year cycles is predicated on. So I think we're now in the last cycle, and some people say, oh, we're getting lengthening cycles. No, it's just like we've just made a binary shift from 4-year cycles into correlations in demand and supply to macro markets.
But it's funny when you say the last cycle, I think your average person, the first thing is going to be like, oh my God, that's bearish. Like, this is it. It just went up and we're done. But I think the point is that it will just continue to rise, and even a 50% correction will be more temporary, and we don't have to wait 4 years to start going up again.
Yeah, thanks for the clarification. I mean, I like the last cycle. It's so dramatic, but you might use Dan Howard's Supercycle. I mean, that sounds like we might skip a cycle, but I think it's like the cycles are ended, and now we're just, the only way is up through a drunken wander.
Do you think that we get to a point in the future where Bitcoin is viewed by Wall Street or your average individual mainstream adoption at a level where it's just another asset in your portfolio, where it's so mainstream that people go, I have a portfolio of stocks and bonds and some crypto and something else? Or do you think that we remain sort of this fringe asset and fringe community?
I think we've probably got another 2 to 4 years to be considered fringe. From 4 years onwards, definitely it'll be mainstream. Just in the adoption numbers, I think we're now in the transition from fringe to mainstream. We can see that from obviously the whales dumping, the hedge funds dumping. It means they've been in this game. Wall Street has been in this game for the last year at very large capital compared to what we're used to. And probably doesn't take much conversation to realize that some of the smartest people on Wall Street are now bored with traditional finance and really excited about what they can build and what they can do in crypto. Certainly the yields inside crypto are huge. Like this market is so inefficient. Talking to some Wall Street guys, they look at the markets here, they run their models across it, and their jaw drops. They go, what
It's like 1980 for them. Yeah, it's like 1980
Yeah,
for Wall Street.
they're like making like 20% per week by running arbitrage from their standard Wall Street models onto here, and they're like, we got to get into this, because the volume's big enough now. They can run a fund doing this stuff. So that's the thing right now. This market is so inefficient that Wall Street's coming in, and anyone with that kind of background is coming in and adding efficiency to the market, and you can almost measure the adoption as the the crazy inefficiencies start to like close. But like if you're in traditional finance, you're lucky if you're getting maybe a few percentage points on your cash, but the yields in crypto are very easy to be double digit, triple digits if you really know what you're doing. Like this thing's going to it's going to 100 trillion, if not more. I imagine the economy is going to get a lot bigger, just because productivity is improving. So yeah, like this is probably a 10x above what banks, the size of the scale of banks. So yeah, I mean, we're so used to, was it 12 years of being the little guys, but now we're in this zone of breaking out of being little to becoming mainstream. And, you can tell that because the chairman of central banks are now, fudding Bitcoin.
They're talking about it. I mean, regardless of what they're saying, the very fact that they're talking about it is astounding.
It's like the very largest banking powers in the world are now scared of this little thing that we thought was a toy a few years ago. So it really is, and it's like it's what is it? It's roughly 160 million people have exposure to Bitcoin today, but that doubles every year. So it's not actually about it's not actually about the size we are in, but it's the growth rate. And the current network growth rate is the fastest growth rate of any technology we've ever seen in the history of mankind, which means that we'll be at saturation within a decade. You got the bankers coming over, and they're coming over in a really interesting rock and a hard place, because they make commercial and retail banks make money by essentially propagating debt and expanding the money supply, through their process of loaning out and then getting deposits and loaning out, and they expand the money supply. And effectively, the central bank goes down through this food chain. And now with central banks effectively saying, we're cutting you guys out, we're going to issue our own currency, central bank digital currencies. The retail and commercial banks are now faced with two things that they can do. Option one is to roll over and die. And option two is to be a Bitcoin bank, right? Essentially be on the other side of the divide, because really it's coming down to central bank digital currencies and free and open peer-to-peer currency. And so you can see one by one, what is it? DBS Singapore is banking Bitcoin. Standard Charter, I think, is initiating something in Europe. Morgan Stanley moving, JP Morgan. And this is they're all coming over to Bitcoin, and they don't have a choice. So that's the interesting thing, is on that side of things, those guys are coming into Bitcoin with I think their tails tucked, because they're forced to. With the valuations now no better than Coinbase, right?
Yeah.
And SBF now, like, I don't know if he was joking or was being serious, but it's like, it's not out of the question to acquire Goldman Sachs. Like,
or
it gives you a little, yeah. Well, and the CME, right? It gives you a little bit of a, a completely flip side thing. We're not that small anymore. Definitely not at the current growth rates.